everybody. The Zaft Lending Report is back, and today we have Sam Chazanow, who is the National Director of Condos for Movement. Welcome,
Sam.
Hey, thank you for having me. Great to be here.
Yeah.
So, condos can be, I've been around long enough and with enough different companies, that can be kind of a scary thing. I early on didn't realize, and a lot of people don't, buyers and realtors, when you take a condo, it's you got to know what to ask, and you don't know what you don't know. There's just a lot that can seem to trip you up, where you think you got a great buyer and they're putting 20% down, you think everything's going to be fine, and then you didn't need to know, or you didn't know that you need to ask about X, Y, or Z. And I think that's what separates Movement from any company that I know of, is you and your team, what you've developed and what you put in place. You do a great job. If I've got a condo, right, I can call, one of the condo team members and say, what do we know about this project, right? And how, do you have a database? Is that on their head? Or how do you guys, I call and say, I've got this project, a Viridian or something like that. How do you guys keep all that in your head to know what, I need to ask about?
Well, we do have a database. And the key to a successful condo financing transaction is understanding what's going on with that project, getting the condo data. And what we do is we research the government databases as well as Fannie and Freddie's database, and only a fraction of the condos that are out there in the U.S. are in their databases. So if the project is not in their database or in our database, once we get the name of the project, the address and contact information, our team will go out and get the data for you. And we start that process early on.
And I don't know if I'm saying this correctly, but like for realtors and buyers, one of the things that's different about a condominium is because there's some common elements, elevators, HOA grounds, right? You're not only concerned about the buyer themselves, but the stability of that condo project, right, to make sure that it's not going to go bankrupt. And so is in a very fundamental way. Is that kind of one of the main differences, is we got to look at the project, not just the individual?
Correct, because when you talk about condos, you're basically looking at airspace. When we look at the risks on a condo project, we want to make sure we understand what's going on in that project, because the buyer is basically buying the airspace within the unit and an undivided interest in the common elements, which is a lot different than buying a regular townhome or a single-family home, when the risk is basically just on the collateral and the buyer. We have to determine the warrantability. And when I say warrantability, that's one of our big mortgage banking terms, that just, we need to make sure that it meets the agency guidelines in terms of safety, in terms of financial solvency, in terms of insurance. So that's what we do. We gather the data on the project. We want to make sure we understand what's going on in that project. We want to know how many units are in the project, if they're all completed, if they're sold, what the occupancy composition is, who is in control of that HOA. Is it the developer or is it the unit owners? Once we have all of that, then we go into the characteristics and look for any type of red flags. Once we have the data and we analyze that, we can let our loan officers know upfront with certainty if that project is eligible for the same type of financing that they're qualified for on the credit side. And that's a huge help, not only to the buyer, but also to the buyer's agent and the listing agent that's marketing that project.
To know right up front what that's going to be. And not only do you guys do such a great job at identifying that up front, but if we started with the traditional Fannie Mae type product, and there's something that is throwing that aside, you guys are great at helping us. Okay, we've got this, it's a non-warrantable, we've got this avenue as well, in finding that home for it too.
Correct. Once we have the data, and the key is the data, we look at that, we determine if it meets agency eligibility. If it doesn't, we're going to let you know what characteristic is off. Perhaps it could be something that may be eligible for FHA or VA financing. Or if it's not the type of occupancy owner occupied for the government programs, we have several investors that are looking at specific characteristics that go beyond the Fannie Freddie guidelines. So we have a lot of homes for you. In addition to that, we also have a broker department that's even expanded for our condo financing options.
As far as that goes. And like, one of the things for, agents out there that, I've learned with movement is it's just, there's some oddities that you think the project's great, but it's not. Like that master insurance policy, that always seems to be, you get tripped up on that sometimes, right? So it's not only what the HOA coverage is, you look at that as far as what the HOA's insurance is on the whole project?
Right, because master insurance can change year to year. And up until this year, for the last 2 years, that was our main reason for project denials. The project didn't have the type of insurance that Fannie and Freddie required. But this year, there are some major changes which have helped with that. We now can do actual cash value on roofs, and we have an increased limit on deductibilities. We went from $5,000 to $50,000 on per unit deductibles, and that's making a lot more projects eligible that were not eligible earlier this year and last year.
Yeah, I believe that the roof issue came up quite a bit.
Quite a bit, yeah.
Yeah.
Here's the thing. Roofs are expensive, and a lot of insurance companies were not lending on roofs for full replacement cost if they were of a certain age. Even though they still had useful life, if they were beyond 10, 12, 15 years, they would not give full replacement costs. So we had to deny the project for Fannie and Freddie guidelines. But now that's solved.
Okay. And one thing, educate us as part of that approval process, this questionnaire form, is there a long form and a short form, or is it all one form now? I lose track of what the rule today is on that form.
Okay, and that's a great question, because there was a time when we had a long form for a full review, and we had a short form for a limited review. And neither Fannie or Freddie actually, to this day, requires a questionnaire. It's something that we use in order to get the data that we need. And we're trying to work with the agencies to have a standardized form so multiple lenders can work with the community associations and be asking the same type of question. But a couple of years ago, we had a horrible situation. We had the collapse, Champlain Tower collapse. And shortly after that, both Fannie and Freddie retired the limited review short form. So even though we were doing limited reviews, we still had to do the long form, which looks at special assessments, they look at budget line items, they look at any critical repairs, and they look at inspections over the last 3 years. So they retired the limited form, the short form, but they allowed the product. Coming next month in August, they're retiring the full limited review for Fannie Mae and what Freddie Mac calls the streamline review. So come next month, everything's going to have to go full review and have budget reviewed.
On that. And you touched on something that we see, the HOA seem to push back for fear, is that, the safety. Are you aware of anything going on? And on some of the questionnaires I've submitted or we've seen, they don't want to fill that, they don't want to answer that question. They're afraid that if they answer that question, that they're held liable if there's something going on. And correct me if I'm wrong, but we're asking the question, are you aware of anything? We're not necessarily asking that HOA to certify there's nothing going on, right? It's more of, I'm not aware of anything, there's nothing that's been brought to our attention, as opposed to, I'm not guaranteeing you that nothing's going to come up in the future.
There's literally been associations that will not answer. They're like, I'm sorry, I will not answer that question.
Right, and under advice from counsel, because
Right.
they're simply not qualified to answer the question. So we bring this up all the time with Fannie and Freddie. I'm part of MBA's condo committee, and we just had a big conference last month where we were discussing this. What we want the HOAs to acknowledge is, have they had any structural or mechanical inspections in the last 3 years? If the answer to that is yes, we need a copy of it. We need to know if they've had that report or not. It's now a mandatory review. If they state that they're not aware of any structural or critical repairs, that's fine. Just give us the data. Give us the data and we'll make that determination.
So what happens if they haven't had those inspections?
That's not a problem, because we're also looking at other items too. We want to make sure that they're not under a current evacuation order, or they haven't failed any jurisdictional inspections. We're also going to rely a lot on the appraisal. So we're going to look at many different items. If we look at the budget and we see a special assessment, and the special assessment is tied to structural work, well, we're going to see, was that work planned for, or is that because of a critical issue going on? So there's things that we need to do from a technical standpoint to make sure that there are no critical repairs.
And one note on that is I've been very pleasantly thrilled with, if ever something comes up, I mean, your team is great at saying, hey, Pete, you've got this issue, but if they'll do this instead, we'll be okay. Is you guys never just deny anything or say we're not going to do it. Your team always comes back and says, if you do this, we're good. And so you always give me an option to go back to the HOA, to go back to the current owner and say, if you just change this or get this accomplished, then we'll be good to go.
Right, we're looking for solutions.
But you've got the difference is not only looking for them, but you've got the knowledge
The
to
depth
actually
of
give me
knowledge.
the solutions.
I've got a team of 16 analysts that this is all we do. We get the data, we validate the data, we decision it. I'm on panels with Fannie Mae on their advisory board, so we have open discussions with them. We want to do the right thing. And we work with Fannie Mae a lot in order to determine, okay, a repair is required. Is this a routine repair? Is this planned for? Is this something that will not result in a catastrophic event if it's not dealt with in the next 12 months? Or is it truly a critical repair? If it's a critical repair, and that repair is not isolated, because if it's isolated to one or a few units, we don't really care about it. But if it's project-wide, we need to make note of it. Also, with the new changes that just came out, they've eliminated this requirement for projects of 10 units or less. So if you're dealing with a 3, 4, 5, 6, 7, up to 10 units, we don't have to go through this extensive review.
Well, that's huge.
Yeah.
Well, Sam, thanks for joining us today, and we look forward talking next time with you.
Great, thank you so much for having
Thank
me.
you.
Okay.